Now, Ben Mandel, the global strategist at JP Morgan Asset Management, and Alicia Levine, the chief strategist at BNY Mellon Investment Management. Good morning to both of you. Ben, you talk about what we should expect after the election. What does after the election mean at this point? Because technically the election has happened, but we're still counting votes, and there are going to be recounts, and there are going to be lawsuits. How much of that uncertainty is going to continue to affect the market?
Well, my advice would be to, as you said, to look beyond the election to the extent that's possible, and to think about the underlying fundamentals here. And there are a number of important drivers to keep in mind. First is that economic momentum has been stronger than many of us expected. It was much stronger in Q3, and it appears, as you saw in the labor data this morning, that continued into Q4. So that's one. Second is a hypothesis that the feedback effects from the virus into outcomes, into restrictions, and into growth is just less powerful. In other words, those links are less strong than they were earlier in the year. That remains to be seen, but that's our working hypothesis. And third is that monetary policy support is ample here. The Fed didn't show its hand yesterday. But in our view, there's still some more QE in the pipeline to bring the Fed's monetary policy stance in line with other developed market central banks, and also with its own forward guidance on rates policy. And so the combination of growth, which is exceeding expectations, and ample monetary policy support in itself, without heroic assumptions about fiscal policy, is pretty good and is enough to justify a pro-risk stance here.
Shepard Smith here. Thanks for watching CNBC on YouTube.